How did you even do that in the 90s with your 486 computer? I mean, how'd you phones? Okay,
everything was on phones. Like, you'd have a big phone with 20 speed dials.
Yep.
And then, see, in the old days, like if I wanted to wipe out 6 bids, I'd take 2 phones. My partner would take 2 phones, and the guy on the other side of me would take 2 phones, and we'd go 1, 2, 3, ready, and we'd all hit 6 market makers instantaneously to wipe out their bids.
Oh my God.
Right? Or to lift their offers to clean out their inventory.
Well, welcome back, everybody, to the Steady Trade podcast. Today is going to be an interesting one, I promise. We have JJ Gorilla. That is his kind of pseudonym for the world. And you'll see that he actually has an avatar up because he isn't able to show his face. And he's going to explain a little bit about that. But I'm going to just tell you, I just got to meet JJ about 2 or 3 months ago, I think, right, JJ? Ray from Confessions of a Market Maker is a co-host with JJ. And so we got to meet then. He has a fascinating story. And one of the things that I hear all the time, Tim Bowen and Stephen talk about is the concept of how there is this they that you're up against as a day trader. And one of the things I learned from JJ getting to know him is that he used to be one of the theys. And I thought, oh, this is great. We can kind of learn from the other side what a lot of day traders are up against. So JJ is a former nightclub bouncer, believe it or not. And it was in the nightclubs where he met traders and deal makers. And that's how he got in the industry. He, saw them spending lots of cash and was like, hey, what are they up to? And so he basically worked in Vancouver as a market maker, and he manipulated penny stocks deals that retail traders love to trade. He's been at it for 20 years, and he has had, lots of ups, but he's also had some downs, which he'll talk about. He did have some partners that stole from him, but after having a heart attack in the 40s, where he technically died, actually, which has got to be an interesting story. Can't wait to hear that, JJ. He decided to leave the industry in that context. And now he actually helps retail traders by educating them on the very tricks he used to pull on them and how to watch out for them. And now, of course, he's a co-host of Confessions of a Market Maker podcast, and he's also a training educator for Micro Futures. So welcome, JJ, to our podcast.
Thank you so much, Kim. It's an honor to be here. Mahalo.
You're welcome. You're welcome. And JJ's got some Hawaiian in him, so
okay.
We're very fortunate to be able to share some of the love of Hawaii. So JJ, that's not really your full bio; it's the short, cliff note version. So please just give us a little bit of background on why you have to have an avatar.
Well, oddly enough, I'm one of the guys that nobody really hears about in the market. I'm sort of the guy who helps people get things done and to make large amounts of money. And so what my job was to help create liquidity to sell vast amounts of cheap stock into by promoters, deal people who did convertible debentures. I started off in advertising, and I was working as a bouncer because I had 4 years in microbiology and there was no way I was going to get into med school. So I was working as a bouncer in Vancouver. A bunch of the traders used to come in because next door there was a strip club, and when that place closed, the girls would come and dance at my nightclub. And so of course traders, they're like they follow. And one of them gave me a book called Liar's Poker by Michael Lewis, and I was hooked. And I was completely hooked, but then I didn't know anything about the market. So what I did was I read Market Wizards.
Now, JJ, sorry, I'm the king of interruption.
Yeah.
Do you mind just giving me timeline? Because again, just kind of, I'm curious, like when this was happening.
This was
Okay.
1990. Yeah.
Fair enough.
When I was a doorman, it was a nightclub called the Love Affair in Vancouver. It was it was like one of those dark holes with music so loud that you had to wear earplugs because the floors would vibrate because it was so loud in
Oh
there.
my God.
You know, they played like Nine Inch Nails and Ministry and stuff like that.
Oh,
So
I have a ministry.
you know,
I forgot about them.
you know, so I'd be at the front of
Did
the.
Ministry do Jesus Built My Hot Rod?
I think so.
I
Yes.
think so.
Yeah.
I think so.
Yeah.
Guys,
Right.
you guys are talking about a different era. I'm not sure what's going on here.
Sorry. We'll share.
I'm
We'll
like
share.
lost in the conversation. I'm sorry I'm late. The link didn't work, and then you talk about things I don't even know.
That's okay. So one of the traders gave me this book. I read it. I was hooked. Then I read Market Wizards by Jack Schwager, who was on our podcast just last night. And Linda Bradford Ratchke said how she got a job in the market was she got a job next to the exchange so she could meet people. So I said, works for her, works for me. I went and got a government job, hung out at a coffee shop where the stock promoters would go until one of them finally noticed me reading the Wall Street Journal, came up to me and offered me a job as a phone chimp. And a phone chimp is the person who calls leads and asks them if they want information. Then a closer calls and gets them to buy a position. So I used to work for the government, worked at these guys at night. And this little guy who hired me was a little East Indian guy. I'm East Indian. Oh, I'm Sri Lankan, but I'm like 6'1", 270. So this little guy was about 5'2", used to wear black suits with cowboy boots, drove a black Rolls. And his assistant was this 6'1" blonde from the Netherlands. They looked like Boris and Natasha from Poland, right?
Totally.
And so he taught me the business a little bit, and then he got me my job working for the company that made the leads, and that's where I got introduced to about 300 public companies, promoters, deal people, guys who ran hedge funds, all the people who used to work at Jordan Belfort's firm who now were stock promoters. All of those people were my clients. And so when I showed up to a brokerage house, which I got the job because one of my buddies was dating the head trader of the brokerage firm, I weaseled my way in, right? Because I applied to all the brokerage firms in Vancouver and I got a PFO letter from every single one of them, which is a please F off. And so I had to weasel my way in just by doing favors, stuff like that. And then one day this guy, Dominic, called me up and he said, hey, JJ, do you want a job? There's an opening on the desk. And I showed up to the firm with 300 clients already who did nothing but liquidate stock at 3.5% commission. So I was hired on the spot and I didn't even know how to trade. Didn't know a single, I was a salesman.
Well, because at that point you're basically just a telemarketer, right? In essence.
Right. Yeah. I was just doing that and, working. What I was doing, we were doing direct mail. So I learned about how to bring liquidity into markets. This was before email. And in fact, the very first email stock tout was a client of mine.
Oh,
the guy who did the very first email stock blast back in 1997, 96, 97. So that's why I was obsessed with liquidity, building it. So I went to work on the trade desk and I was in the top 10 within the first 2 months because my commissions were, first month I made 10 grand, 65 grand the second month, and then 200 grand like clockwork every month after that. Because I'm charging 3 to 5%. We also had 13-day settlement in Vancouver. So what you do is you open 50 brokerage accounts, wash trade between them to create the illusion of activity. Then retail jumps in and you slam them.
So can I get that, but a lot of newer traders are on this podcast.
Mm-hmm.
Explain, get into the mechanics of that a little bit more. I mean, because
exactly.
you're basically creating fake volume in essence to make it show up on people's radar. Yeah.
Exactly. All of trading is about supply. Demand is artificially created. And there's two types of buying. There's real buying for investment purposes. And then there's buying like you see in our markets, which is buying to move a market up to sell a position that you've bought at a cheaper price. There is an element to the US capital markets, which is the wholesale market making side. They take the other side of our trades and provide us liquidity. So what I would do was I would have, say, 50 million shares of stock between 20 or 30 different accounts, all offshore. Okay. Then what we'd do is we'd pay one of these, like one of these, touty trader rooms. We'd wire them 75 grand to their offshore account, and they'd tell all their traders to come in and buy the stock. So when they did that, what I would do is I would fill them. So what happened was there was a market maker called Knight Securities, and then Schwab. Knight got bought by Virtue, and Knight was the big animal in the house, and they got 90% of the order flow. So E-Trade, Ameritrade, TD, Scottrade, all of those places routed to Knight. So I'd call my guys at Knight and I'd go, listen, ABCD, show me bids. And what I would do is I would manipulate all the market makers on a level 2 it was like sort of my chessboard. So I'd move all the market makers around with my orders because I was the only one who had supply.
Right.
Right. So Knight would call me. It would be $1 bid. He'd go, JJ, I can pay the bid for 200,000 shares. So I'd sell him 200,000 shares at 97 cents, and he'd make $6 grand for picking up the phone for calling me for a 10-second phone call. Right. I would charge 4% on that trade of the dollar volume, the dollar value of that trade. And that's how we made money. And the promoter who got the stock for free didn't care about price. Right. Mm-hmm. And that's what a lot of traders don't understand is when there is outside supply in the market, it doesn't care about price. It's looking for liquidity.
Right.
If I have 5 million shares to sell and it's $5 bid, and I see a bid for $3 for 500,000 shares, I'm hitting that bid and I will go right through you to get to it. Right. So that's what I did. I would move market makers around. I would pay them. Retail trading is all about discipline and homework and stuff like that. On the other side, it's about doing favors, extortion, blackmail. That's how you get work done. But what happens is, if you have 200, 300 million shares, I open the stock at 5 cents. I'll move it up to $2-3, and then we'll start selling her down. You get 50 cents for 100 million shares. That's not a bad 3 weeks work, right?
Not a bad payday. Yeah.
Especially if you don't pay taxes on it. Right?
Exactly.
So, my first client was a Swiss bank. So all my clients were either Swiss banks, stuff out of the Cayman Islands. And the reason I don't show my face is a lot of my clients are still alive, and some of them are, I traded for some pretty extremely wealthy people, ex-CIA spooks, arms dealers, things like that. I would do short squeezes. That was my specialty, is how to engineer and manipulate a short squeeze. I once took a stock from 30 cents to $300.
Beautiful.
I once held a NASDAQ $30 stock at 90 RSI for 3 months. Things like that. So I would engineer. So I don't show my face because I'm not really supposed to be talking about this, because my business cards used to say your secrets die with me.
I like that.
Right. So, but after meeting retail traders, it just made me sick to see how people are losing money because they don't understand the business. And I was like, okay, you know what? I've taken enough. Maybe it's time to give something back. And nobody really talks about the stuff I do. So it's, I find that really odd because I've never really looked into the retail trading community until the last couple of years. And I thought, at least if I can tell these people what's going on at, what time of the day these guys are doing this type of business, maybe I can help some people, at least make some money, or at least not blow up their accounts.
And I guess, so now we'll kind of get through the timeline, and then I'm sure we'll have plenty of discussion. So this is the 90s. You're doing that. Kind of what changed? Why did you leave? Or kind of give us the rest of the story arc, I guess.
Well, there was one of the clients that I was trading for was a really snaky dude. He looked like Walter Matthau. And one day I had the flu. We were doing a short squeeze, and I had taken the stock from 25 cents to $25. And what we were doing was using...
That's the kind of stock Steven loves to short. He loves to short those.
Exactly. Oh, well, I've learned to keep out of them because I see what these people do. Like, I see what you guys do, and I see how manipulated it is. It's unbelievable. But we've got to play your game.
Yeah, there's lots of there's lots of normal shorts that you can take when there's supply. But a lot of these times what I'll do is I'll restrict supply. So I'll have a short position that's bigger than the float. There's a way to do that. There's a plumbing that exists underneath the stock market called clearing and settlement, which not a lot of people pay attention to, but that's how you make big money, by paying attention to all those little details. Most people, for example, don't know that when they own a stock in their brokerage account, they don't actually own it. It's owned by Seed and Company, which is the nominee for DTC. So they don't even know that they don't own the stock. They just have a legal agreement with the brokerage firm, who has a legal agreement with Seed and Company and their transfer agent or their clearing. So a lot of these things people don't understand, but those things in the system you manipulate. Like I would always do short squeezes at the end of the month, because market makers don't sell a lot at the end of the month short, because they don't want to be offside, because they don't get paid. So they'll back away from offers. Why do you think stocks run at the end of the month? Right? Right? There's tactical things. Everything we do is tactical. We have a plan, we have agenda, and we carry out that plan. And so I was doing this happily, having a great time. This client like Walter Matthau, we were doing a short squeeze. I got the flu, and my stupid partner let this guy trade in excess of the account. And what he did was he took $7 million out of the prime broker at Manufacturers Trust, and not Manufacturers Trust,
Manufacturers Hanover?
M&T Bank. And what they did is we had DVP accounts, and they stuck us with the buys, and they grabbed the sells at $25, and I was left with a $700,000 debit.
Shit.
So the only time I've ever lost money trading is when your client screws you, because that's what happens. So there was another broker who was doing really well. He was doing about 5-6 million a month, and he said, "Listen, I need you to come run my trading room. It's out of the city, but I won't take any of your commissions, and you'll be able to pay off your debt quicker." So I did. And I went to work for a guy who we traded for the number one guy from Stratton Oakmont, one of the brokers from Wolf of Wall Street.
I was going to say that was one of Belford's, wasn't it? Yeah.
Yeah, that was one of Jordan's, and most of Jordan's brokers were stock promoters, because they said, Belford said, 50 million in a year. These guys were like, well, why just do my own deal, sell my own stock? I'll make 50 million in a week, right? So what these guys did was they put deals together. I traded them out. Some of the really heavy duty criminal ones. See, back in the day, you didn't even need ID to open an account.
Oh, really?
So you would have all of these fake accounts. One guy who ran, probably through my boss, he ran at least $500,000 of commission a month through my boss. All we knew was his name was Florida. Right.
Wow.
Now, is this unique to Vancouver, or was this is this still going on today? Or
no.
I was going to say,
yeah. Now, they've regulated the brokerage industry so much, but I mean, when I got into it, it was the 90s, and it was still Wild West.
Okay.
We had paper tickets. Everything. My job was to look at the rules and figure a way around them without getting us arrested.
Yeah.
So,
reminds me of Days of Thunder, the Tom Cruise, the NASCAR movie.
Yeah.
It's your job to catch me, man. When they're racing cars, yeah.
Yeah, and we were just it was a great time, because you're in your 20s and you're making 200 grand a month. My market makers were making 4 or 5 million a month, right? So if I was retail trading and I lost 20 grand, I'd just call up somebody and go, "Hey, can you put up 20 for me?" And they'd take it. So they'd take the bad trade off of me. That's not a good habit as a retail trader, right? Sure. Because you don't, you can always get some, or you can stuff it in a client account that owes you money or something, right?
Yeah.
So we had a lot of bad habits that way. And what was going on was, there was a client of this guy, my boss, and we'll call him T-Bone. And the client was using fake ID to open accounts. And he ran a massive deal, where they had enough money to actually advertise on CNBC. And this thing was trading millions and millions of dollars worth of dollar volume every day. It was trading like a NASDAQ deal on the OTCBB, which was pink sheets at the time. And I kept saying to the compliance officer, who was a young guy that we used to bribe, because
I love that your compliance guy takes bribes.
Oh yeah, because his sister had an account, and we just run trades through his sister's account.
I bet he got I bet he won the best compliance officer award every month.
Yeah. It's like, hey, your sister made $5,000. Click, right? And we just run flips through his account, and we used to call him Radio Raheem. And Radio, I kept telling Radio, I go, man, there's a lot of money going through this office, man. There's something. Are you sure everything's okay? And he's like, yeah. And I'm like, because most brokers were making $200,000-300,000 a month. My boss was making $6 million a month, right? Right. And I'm like, I don't know, man. And I go, these deals they're trading so much dollar volume. And this is before like awesome penny stocks and those guys. So trading $20-30 million worth of paper in a day was quite an accomplishment. And I was like, oh man, I just like,
we lost you for about 10 seconds there.
Are you there?
Yep.
Hear me? Oh yeah.
You just dropped out for a second.
Oh, sorry. So
that was Radio Raheem.
Yeah, exactly.
Yeah, that was Radio Raheem.
Make sure you get your tinfoil hat.
Yeah.
He hears you now. He hears you now, JJ.
He hears me now.
JJ, what do you think is the most important thing, though, that the retail traders now need to watch out for?
Well, they think they need to know the business. They need to understand what's going on in the business and how it pertains to them. The biggest mistake I see people doing is shorting when there's no supply. And going after those kind of sexy stocks when, like Ray, who's been on your podcast, I mean, he'll come up with something like a 9 EMA scan where they can just take a nice, easy trade and just, hug the EMA and everything will be okay. Right. So it's just, it's that, it's that feeling I get that so much of the trading information is wrong out there. And I hate to say it, but I've taken 200 companies public, and I've traded billions of dollars in dollar volume. And I've done things that, like, honestly, that are just absolutely, I mean, selling stock to Germany, I've done all of that, so I look at the way people are trading and they're like, you see people doing things like shorting Tesla. When you look, all you need to do is look at the float, look who owns it, and realize that they're not selling it for 20 years. Why would you short it? There's no supply, right? People, the thing is, they've overcomplicated trading so much that people forget that all this stuff started under a tree 300 years ago. And we were so smelly, they wouldn't even let us into a building. So, and I grew up with the kind of guys that were street smart. The first time I went to the New York Stock Exchange and met floor traders there were guys from Staten Island, Jersey. They didn't have PhDs.
No.
They weren't from Wharton.
None
they were
of them
street
do.
smart.
Totally.
Right. So I see so much a tendency to overcomplicate trading. And trading is all about supply. If there's no outside supply, then it's just inside supply, which is moved back and forth by wholesale, because that's their business model, right? They take it up, sell it to us. When we get tired of holding it, they take it down, buy it back, and they'll take a market up and hold it up to sell what they bought cheaper. And nobody understands that, right? And if you understood that, then you wouldn't be shorting when they're moving the market up, right? You'd be just going with it, right?
Is there like a website though that's like, do not short this, the supply's been removed? Like, is there a website that just tells us this, or what?
No, it's just a little common sense. Here's the thing. There's a very secretive website. Nobody's ever heard of it. It's called Yahoo Finance. On there, you can go in and type in a stock, and it'll tell you statistics. It'll tell you what the structure is. Yep. Most people are trading stock. They don't even know what structure is. When you take a company public, it is structured in a way. There's an outstanding, there's an issued, and there's a float. And in that float, you have to see who owns that float, because it's all about who owns the marbles. It doesn't matter. You know, Bailey Gifford owns a huge position in Tesla. Their time frame to hold an investment is 20, 30 years. They think that stock's going to 10,000.
So do I.
Why the hell would they sell it at $600?
Exactly. Yeah.
Right. Yeah.
Right. So there's no supply. Right. People get so involved in indicators and this and that and sunspots and, you know, bulls holding flags. I don't know how they do. They have hooves. There's no retractable thumbs. I don't get all of this stuff. I don't even use candles. I use market profile because it shows me where the position is. Right. And thank God I learned that, because I mean, I used to build candles, but I don't trade them at all. And that's not taking anything away, but wouldn't you want to trade and actually understand the business? And instead of thinking about what should happen, news, this, that. Listen, I used to write news releases when the CEOs are too drunk, or when you can't find them after you've given them $2 million and they go on a bender. Right. So I was the guy who wrote the news releases. Why the hell would I read anything that, you know, or trust that? Right. It's all that's all advertising. Like when they take a stock up in the pre-market, that's advertising to get you to come.
Exactly. Yep.
Right. Just like when I was a bouncer, you open the club at 9, at 11, you start a lineup, even if the club is empty. Why? Because people will go stand in line. People will always chase price. You get them to chase it in the pre-open. And here's the thing, deal guys know this, but most retail traders don't know that you can move a market up a lot pre-open, because market makers don't have to make good on the minimum. So you can call them and you can tell them to move away, and they'll back away, so that you're doing them a favor, right? So they pull their offers, you open on a gap, retail comes in, and that's buying that you've created, and then you sell it to them.
Yep.
Right? You take markets up to create demand, and then you introduce supply. That's why you have a market. It's just like Walmart, except instead of toasters, we're selling you worthless paper.
Sure, exactly.
You know?
Steven, did you have a question?
Yeah, actually, Steven. I forgot. Sorry.
No, I'd say I'm blown away, but I kind of knew it happened, but I just didn't know that it was like this just big club and everyone's just getting super rich. I thought it was on a smaller scale, and I didn't realize it was people were so like brash about it, and just people made a lot of money. I mean, I feel sorry for us retail traders, but I mean, I don't know what to ask. It's kind of like just, again, I mean, we just, as traders, we just cut losses quickly. If something looks sketchy, if something looks amiss, we just try and guess what the market makers are doing and just.
And the thing is, it's really not that complicated. It's just that nobody takes the time to learn, because nobody ever talks about what I talk about. I don't know why it's never discussed.
Because nobody wants to walk away from that kind of money, JJ. Like, who wants to explain the secret sauce? It's like the secret sauce. What's in there? What's in their benefit? Like, I mean, you have a decency.
So here's my question. You know, and I 100% agree with you. But you know, like let's say the listener out there, where do they go to learn this? Versus, you know, do they go to the strip club at 3 a.m. and look and try and get a job?
No. Here's the thing: there are people and books who have educated. Those books and people are not okay. Well, there's Reminiscence of a Stock Operator, which I've given out 50 copies of that at least.
Wow.
I have a copy in my phone, in my car.
Wow.
It's like the Bible. I carry it around because every month I reread it.
Wow.
And I find stuff he talked about that still takes place now.
Wow. Wow.
There's a book written in 1874 by a man called William Worthington Fowler that describes all of the operations of Vanderbilt, Morgan, all of these big manipulators. This has been going on since time began. U.S. Steel, the very first billion-dollar public company, right? Morgan took it public with Carnegie and Schwab. But in the end, they needed to hire James R. Keene to make a market to dispose of $500 million worth of paper, right? You need to create a market to sell size into. That is what the markets are all about. And I teach this every day, and not to tout my thing, but what I like to do is I like to tell people, look, this is the common sense. This is the business. This is when we trade. This is when we don't. This is what we look for, right? And when it's not doing that, just chill, right? I like retail trading because I find it relaxing compared to what I do. Because I used to have to manipulate 20, 30 different stocks at the same time. So I'd have 30 level twos
with
up
50,
on
with
screens.
50 different brokerage accounts and everything. And
well,
how did you even do that? How did you even do that in the 90s with your 486 computer? I mean, how'd you phones? Okay,
everything was on phones. Like you'd have a big phone with 20 speed dials.
Yep.
And then see, in the old days, like if I wanted to wipe out 6 bids, I'd take 2 phones. My partner would take 2 phones, and the guy on the other side of me would take 2 phones, and we'd go 1, 2, 3, ready, and we'd all hit 6 market makers instantaneously to wipe out their bids.
Oh my
right?
God.
Or to lift their offers to clean out their inventory, right? There are other things too, like, if I'm trading a stock and I want to get people short, I'll put a market maker who doesn't have any call, that doesn't have a lot of clients. I'll put him on the low offer, and then I'll auto execute all the big ones off of his offer, clean out their inventories, lift his offer, and then jam the market up.
See, so this is and this is where Stephen. So Stephen and I are obviously retail traders, okay.
Mm-hmm.
And we really focus on low floats, okay. That's kind of our niche, low floats in a hot sector with a day one type press release. Now, what's different between him and I is I used to try and short these and did it for years, and then I felt like a market shift in like 2016. So now I'm almost exclusively looking to play the squeeze when I see that float rotating, 10 times, 100 times. And because I think I recognized a change in the market. Now, Steven shorts those and does well at it because he's so good at, at sticking to stop losses and stuff. But what is, and that's why Kim brought you on as the they, because Steven and I talk about this a lot is, we see this like you said, you've got that, that sketchy stock that's bullshit press release that's jammed up in pre-market, pulls at the open, and then rips back. Yeah. Is that the they? I mean, is that? Yeah.
Yes. Okay. So here's the thing. In the pre-market, what we do, if you guys know what a box is,
box in a trade, like
box of trade, yeah.
No, the box account.
No,
the box. That's the account that runs the stock.
Okay.
Okay. Usually it's the deal guys or a group of deal guys, and it's the cash and the stock are in those accounts. So what happens is in the pre-market, I will bid the market up. You guys will come, right? This is called a gap and trap. So we gap the market up, right? Right. We gap it. We sell into.
I like the sounds of this,
right? And we hold it up we hold the market up just to sell it to you, right? Now, once, like we have a saying, when the ducks are quacking, feed them. So you guys come, we feed you. Then when you're overstuffed, we pull the bid, and that's the trap. And then take out all your stops, buy it all back. That up and down motion cashes up the box. So now we have all your stock and all your cash. So we've made a little bit of money. Now what we do is we cut supply. And then that second run starts. Right? And then we'll sell into that gently. Now, if it's a good, what I say, my book is called, the one I'm writing is called Proper Villains. And I'll say, if it's a good criminal, they'll take their time and they'll feather the selling out.
The long con, as they say.
Right? Yeah. Well, the story about the 2 bulls, right? The story about the 2 bulls is the first thing you learn on a trade desk, right?
Yep.
When you have all the money and all
Steven's the young bull and I'm the old bull.
Right?
You know the saying, right? You know the saying, Steven?
Yeah, I get it, but look, everything that you're saying and all of the words that you're using, we just have different words. So like we know your game, we don't know the intricacies, we don't know how you do it, but we know that we're like they are soaking. Like there's soaking going on. Someone's soaking the stock. Someone's holding the price. This is gonna go parabolic. They're gonna soak, and send it parabolic soon. Or for example, we'll know that it's run up, and then someone will pull the rug. So as retail traders, we have like the same words but different for things we need to watch
yeah. I
out.
mean, I talk manipulatorese, right? And I try and translate that to retail. But yeah, so we'll that move in the pre-market cashes us up. It allows us to hold the bid at higher prices and make it go parabolic, like you say. When it goes parabolic, retail just comes running, right? They just chase because human beings chase price, right? Just like they'll stand in line to buy an iPhone, right? It's just human behavior, right? So when you chase price, we fill you. Now, if the stock has any kind of supply at all, I mean, we'll start filling. But if there is really no supply and the thing actually is not being run properly, it can just keep going and going and going. But most of these deals now, the way the market is structured, most of these deals either have a convertible debenture or an institutional holder or an offshore holder that has a sizable position, and they will liquidate into that buying, right? We always sell into strength.
Yep.
Yeah, but just to clarify, so you'll pull the supply and then you'll ignite the fire, get the demand going, get the retailers interested. You've already pulled the supply, so it's easy to push that stock higher.
Exactly.
You'll get the retailers to chase it. Then when it's really just too good to be true, boom, you hit that selling, you put that supply back in the market, and all of a sudden you guys take.
Yeah. And
the thing is, it's beautiful. I want to be on your side.
It's a great thing. And see, I mean, I used to do this all the time. I used to always remember when someone's desperate to sell, you must take advantage of them. So what I would do, see, in the old days, we would have these pirate market making firms, right? There was a firm called Fierro Brothers who were notorious short seller. The guy used to wear a bulletproof vest to work because
oh my God.
Right?
Jeez.
We had guys like this.
All short sellers should wear a bulletproof vest.
Right? So this is back when we were allowed to naked short. So what I would do is if I knew that there was a Vancouver promoter who had a crappy deal and I didn't like the guy, say, or he was a dirtbag, right? So they've got a deal and they're paying for promotion, right? I know that the guy can't trade his way out of a wet paper bag. So I call Knight and I go, show me bids. So he'll go, hey, JJ, I can pay 100,000. I can pay $1 or the bid for 100,000 shares. So I'll go, great. I'll sell you 100,000 at 96 or 97 cents. He makes $4,000 for making the call, right? And then I'll say, get the hell out of the way, right? Or I'll flash 666 on the offer, right? Then my guys know to get the hell out of the way, and then I will beat the holy living crap out of that stock from 97 cents down to 60 cents. The people who are on the other side of the deal in Vancouver, because they're not used to trading OTC BB stocks, have no idea what's going on, right? So I knock it down to 60 cents, and then I'll send another market maker to the promoter's trader and say, listen, I can pay you 65 cents for 100,000. They'll sell it because they got that stock for free. Yeah. So now I've made 40 cents on 100,000 shares for 20 minutes work.
Now how do one of the mechanics things that I've never fully understood is like, how do you, and I don't want anything to do with any of this, but like, how does someone obtain this paper? Is this in like shady back rooms over lines of Coke or what?
No. Usually it's at places like Peter Luger or Smith Walensky. Here's what happens, right? When I first started in this advertising business, that the little Bullwinkle guy got me a job at, we had all these public companies and I didn't know. And I said to my boss, I said, hey, chief, I said, which one of these deals should I buy? Like, which one can I make money on? He looked at me and he said, JJ, you don't buy stock, you sell it.
Right.
Right. And I'm like, okay, well, how the hell do you sell it if you don't buy it? He goes,
there you go. That's kind of where I was headed. Yeah.
You get it given to you.
Okay.
Okay. People would pay me sometimes people would pay me 1 million shares to work on a deal for 3 weeks. JJ, can you help me trade this out? It's 20-cent paper. Here's 1 million shares, right? Help me out while I get rid of this. Help me move this out. Help me trade it out. And you know what? If you need more paper, just ask. It's 15 cents a pound, right? See, the thing is, stock is just worthless paper, right? It's not, we try and put, but and under that $20 range, a lot of these companies, well, hell, even Uber, what did they lose? $4 billion, right? Usually that would be a bankruptcy filing. Now it's a public company,
Sure.
right? Because we have cheap interest rates and people will buy anything, right? When people are spending $400 million on Halloween costumes for their pets, you can sell them any worthless piece of crap stock.
Fair
right?
enough.
Come on. I mean, seriously, the economy is awash in cheap money, right? So people are taking advantage of that. I mean, could you imagine walking into JP Morgan's office and saying, I've got a unicorn I want to take public?
Right.
He would beat you until you bled to death, right?
Yeah,
I mean,
totally unprofitable company.
Yeah,
So.
let's take this public, right? So, that's the thing. And that was a tough thing for me when I became a retail trader because I was addicted to free stock, right? It's the worst addiction to have because, and deal guys, they'd say they'd have 2, 3, or 4 deals. And what they do is like, oh, if you need 50 grand for the weekend, just pick up the phone and sell some stock.
Wow.
Right? That's how we talked. And my clients, I never had a single retail client. So at the end of the day, my phone call was, JJ, what was the volume? It was 10 million shares. How much did I sell? 3. Okay, you know what to do on settlement. Wire the money here. See you. Click. That was it.
So how, JJ, is it possible today, if there is more regulation, like what are traders up against today? What are they up against today if it's not as Wild West anymore in the United States?
Yeah.
Look, we have Canadian viewers too, but probably a lot of US viewers.
They've regulated the markets, and now that under $5 price range is very, very Disneyland family friendly, right? Compared to when I was trading.
Got it.
I find that there are a lot of Goldman, Morgan Stanley, those guys who now have their own funds. There's a couple of deals that I traded not last Christmas, and I haven't traded equities for a while because I just love the ES. It's just so much easier. There was a couple of fund managers. They were Morgan Stanley, and then they went to Tiger Management, trained by Julian Robertson, and now they have their own funds. So what I'll do is I'll look to see who owns the paper in these companies. And if they're good criminals, you can trade those stocks back and forth for months because they're long-term greedy, right? So even if you're a day trader, have a list of symbols by guys who are Morgan, Goldman, whatever. Learn who's who in the zoo, right? And then just trade their deals, because if they're long-term greedy, they're gonna take the stock down, they're gonna clean the float out, then take it back up, right? Resell it, and they're gonna work it out for 2 years.
This is where, again, and I think this is where when Kim hears me talk about this, that's always been my suspicion that and my next question is time frame, because you're when I talked about they and Kim and Steven would, I've always talked about, like, it felt like 5 years ago, all of a sudden, like, real money came in to the penny stock type stuff, and
Exactly.
something changed.
Exactly. What happened?
So these guys you're talking about, am I right that this was like 2015?
Yes, exactly. And you know what this is? This is all because of clearing. This is all because of clearing. Okay.
I fucking knew it.
He's so happy to have that confirmed, JJ.
Guys like me, we can't clear stock anymore. I've got people trying to clear stock in South Africa, right? Because U.S. brokerage firms don't take stock certificates.
Wow.
So the only people who can do these deals are people who have prime brokerage accounts that are the big money people. Now, they're not BlackRock and stuff like that, but what they are is, say you were working at Goldman and you were there 10 years, they didn't make you partner, so they give you a goodbye gift of 10, 15 million, right? You take that, you go open your own fund, You go to a prime broker. The prime broker will like raise you 200-300 million. Then they'll leverage you up. Those guys are participating in these deals. If you read The Buy Side by Turney Duff, who's a buddy of mine and who's been
threw
on our
my pen.
podcast, right?
The buy side. Right?
When he was
I
working,
threw everything on my desk. But
So excited.
when he was working for Galleon and Argus, right, two big hedge funds, they had the healthcare mafia. So all the healthcare traders from all the funds would get together, have margaritas and get drunk, and then they'd slice up the deals. Read Hedgehogging by Barton Biggs. Same thing, right? These guys, they get together, they slice up the pie, they take down chunks. We call it taking down a position. You take down a position and everybody sells together. Somebody backdoors you, they're not in on the next deal, right? But now you have big sophisticated money who are long-term greedy, who are taught properly how to be proper villains. They're in the market now. That's why you have stocks. Look at NIO. Look at these deals that are trading, right? You know, they're proper villains. They're good criminals. They know how to do it.
Is that
No.
JKS
Yeah,
as well?
my
JKS?
JK, you beat me. Well, we said at the same time. And JJ, maybe I don't know, maybe you remember JKS or don't. That stock was it was like 2 months ago.
Yeah.
It was green every fucking day for like 40 days.
Well,
And
you guys,
you know.
I'll show you something. There's, I don't know if I'm allowed to show it, but there was a deal that I did for a client where we didn't have a down day in 2 years. And it actually got written up by Bloomberg.
But you know what you do though? You give it a first red day, and then the next day you just gap that shit up. You just gap it up after your first red day.
Yeah.
But can I just ask? So for retail traders, would you say it's retail versus retail, or is it just retail versus day?
No, okay. Well, the thing is, you've got to understand there's somebody taking the other side of your trade. They paid your brokerage house to take the other side of your trade. They are trading against your order flow. So for example, you trade at Ameritrade or Scottrade or one of these places or E-Trade, your order goes to Citadel, right? If you're buying 1,000 shares of ABC and they don't have 1,000 shares, they will short it to you, right? That is their business model. It is called providing liquidity. Otherwise, what would happen was if you went to buy a $5 stock and there was no market maker providing liquidity, you'd get 100 at 5, 100 at 5.20, 100 at 5.30, 100 at 5.50, and 100 at 6, because there'd be nobody that willing to sell it to you.
Right.
So shorting to retail is one of the most misunderstood concepts that retail traders have and don't know anything about. The market maker's job is to short to you. He's not doing it because it's malicious. He's doing it so you can get your stock at the price you want. Now, that entails risk, right? So the market maker is at risk on that stock and he has to go to the bid to cover. Now, they do this millions of times a day. And this is why Citadel made $3 billion when the markets crashed in March. And this is why Ken Griffin can buy $200 million condos like we buy a chocolate bar, right? Because you're providing liquidity, and Citadel and Virtue are the two largest market makers in the world, Susquehanna too. They get the lion's share of all the order flow, right? They have massive inventories, and retail traders should know what an inventory is, because you eventually become inventory. Like right now in the S&P 500 ES, inventory is long. Right? So when inventory is long and there's no upside continuation, the market maker who is selling the stock up there to you or whatever, they're going to pull the bids, run the stops, get everybody out, and then take the market back up again later. Right? So you have to understand the mechanics of the business model. And then there's sometimes like in choppy trade means it's a washing machine. Yep. We're trying to build a position. So we're cleaning up, cleaning down. It's like a vacuum cleaner.
See, and that's where, and this will, the listeners know, and this is what, this is visually for me, when I'm talking this low floater, that's, and I know this is kind of more degenerate day trader talk than what you have, but, that's when I'm always looking at that VWAP hugging action, I call it.
Yeah.
Like all through the day, it's just up, it's below, it's up, it's below, it's up, below. Cause I just imagine them, building this. And then we see that late day blow up, and then they sell into it. Yeah,
exactly. Right. Because all the thing is now, for example, for the last couple of months, people are wondering why the market's not going down. Well, because BlackRock's not selling, right? Vanguard's not selling. But here's the thing. If you had, look, what's the daily volume on Apple today? 52 million shares. You go try and sell 200 million shares of Apple today. You'll take the stock to $5.
Right.
The market's not, we don't have liquid markets in the United States, right? You couldn't sell if Vanguard came out of 10% of their position.
Sure.
The stock would good luck holding 5, right? So because the thing is, we used to have a trick. When you got a deal, right, you want to get a bank or a fund so long that they can't sell. You just load them up with stuff them with so much paper, right?
That's the old saying, if you owe the bank $1 million, they owe you. If the bank, if the bank owes, or if you owe the bank 100 million, you own the bank.
you own them, baby. Right? There was a deal called CanWest, and the guys, they were these rounders from Vancouver, and they'd never done well, and they finally figured out they got Bank of Montreal so long this thing. They took the stock from $1 to $20, and all of them made $300 million, and everyone was happy. And it's just because you got a bank so long that they can't sell the crap, right? Now, so that's the model of the U.S. markets now. So what happens is the only movement caused in, say, the S&P is by wholesale moving the position back and forth. That's all it is, right? It's inside volume. On a stock, it'll all be inside volume if it's institutionally held, especially if those institutions are holding for 30 years, right? But if those are short-term players, then you're going to get more movement and more selling, right? Like NKLA, right? We've got a guy in our room who's been around the block and knows those boys and knows how they trade it out. And, we all kind of work together at the same time. So you can look at deals and you can look, okay, they're going to take it up here. And the way my market profile works, you guys got to come check it out, because you can call levels to the tick, right, to the penny. And it's not just me. It's just because it's the transactions, right? If you know where things are going, that if price accepts over a certain level, it's going to go here. If it rejects that level, it's going to come back to the next level. And that really, really helps people. The hardest thing for people to do is to keep a clear head, because they don't know what's going on. But if like for NIO, I knew that once it went to 54.42, it would look above, and if it failed 54.42, it was a short, right? And it was all the way down to 40.18 and even lower. And then once it couldn't get lower than 40.18, you knew it was going to come back up to 40.3 and 45, which it just did. Right.
So my question for you, and this is, and then Stephen, you're next. What is, and we mentioned a bunch of books, but what are your top tips for, because listen, and this is no offense to any of our listeners, I'm guessing a lot of this way over their heads. So what are your resources? What are your advice to the listener that's like, whoa, this guy's talking about shit I don't even know? Where do they go? Where do they begin?
Well, you know what? They could just DM me, and one of these days, because a lot of the stuff I talk about is not written in books that have been written in the last 100 years, right? Yeah. I mean, we had Jack Schwager on the show last night, and some of the things I said, he looked at me like, because he's been around real traders who trade real money. I had to make $1 billion market, but I only had 10 grand to do it with. So I had to find my way around the rules, right? I was always making a silk purse out of a sow's ear, right? So, the tricks of like DTC, for example. If I wanted to find out, say if I was short, right? Say we're short something, right? What I do is, in the old days, they used to have block guys who would shop discounted blocks. So if we're short something at $6, I'd get one of my guys to call him and say, hey, somebody's shopping 2 million shares of this at a 30% discount. So they would all start shorting it, and then we could cover, Right?
Steven, what are
Right?
you going to say? You look like you have a question.
I'm just a little bit blown away by it all. Like I think most of the listeners will be as well.
Right there with you, brother.
I'm blown away by the honesty, and thank you for that. But I mean, I don't really have a question. I'm just trying to piece things together in my mind because I've been told a lot of information, but it all makes sense. But it's like, to be a good day trader, it's almost like you need to learn the market tricks. That's all I can kind of see. You need to learn what the manipulators are doing.
It's just the business.
Right.
But,
Right? See, if you wanted to be a doctor, if you wanted to be a brain surgeon, right? Wouldn't you want to know basic anatomy?
yeah, it's weird though, because we don't get told to look here though. Like you get told to check the float, check the volume, and this. But like, there's so many floats that are like, this is high flow. Why did it just run 30%? Ah, now I know someone's holding the supply back, and it's to trick people.
Yeah, you know, the thing is, especially what is enlightening is I was introduced to Jim Dalton early in my retail trading career. Because what happened with me is in 2012, I had some really, I had my best friend who was like a brother to me, got me into a lot of trouble, stole like almost, 10 and a lot of stock. And, we were doing deals and he went to the dark side and he ended up actually making billions, but very, very, very illegally. And I got into a lot of trouble. I had a heart attack in 2012. I went into the hospital. My blood pressure was 280 over something. The nurse almost fell over. They started working on me and I died. And I was dead for about 4 minutes. That was a really beautiful experience. Nothing wrong with it. And when I came back to life, I kind of went, do I really want to do this anymore? Right. And so I thought, okay, I'll trade retail. How hard can it be? Well, here I am with a ton of bad habits, right? And I'm trading retail and I'm trading like a market maker.
Because every time you're upside down, you can't just call your buddies.
Yeah,
Exactly.
right.
Back in the old days, if I had a losing position, I just picked up the phone.
Yeah, and somebody would take it off of me. Right? I'm like, what is this, loss? So I was really cheap. So I started trading just really, really small, and I lost like $300, and nothing I did worked. Right?
Wow.
Then I started looking at these candles, and you have dojis and emojis and pregnant women and this and that, and oh my God, what the hell?
Abandoned babies. Abandoned baby is always my favorite candle.
I'm like, what is this? And then Fibonacci, which would be a really cool name. Next lifetime, I'm coming back with that last name. Right? Hey, I'm Fibonacci. I'm a very extravagant man. But no, and so I didn't know what to do. And so I went to Tasty Trade, and thank God Peter Resnicek and Brad Agunas were on there, the Shadow Trader boys, and they had these market profile charts. And I've been around the market. Listen, my first deal I worked on was Bre-X Minerals. Ever seen the movie Gold? With Matthew McConaughey. Well, that was the first deal.
I've seen it. Yeah, I've seen that. Yeah.
Right. My client had 5 million shares from 30 cents to $280. That's how he made his first 300 million. And it was all great until somebody fell out of a helicopter. But anyway,
That'll happen.
It does happen. So I was like, oh my God, I felt like an idiot, right? I can manipulate a stock to $300, but I can't day trade one measly ES contract. So I found Resnicek. I found these market profile charts, which looked like hieroglyphics from like some alien world. And I was like, what the hell is this? But one thing I noticed about those two is they were so calm, right? Because I had a heart attack, and when I started trading retail, I would get this heart palpitation, right? And I get stressed out over $50 because I'm cheap, right? Because it's my money, right? If it's not OPM, I'm cheap. If it's not other people's money, I'm not wasting my money, right? So I'm like, okay. So I start following these guys, and then they led me to Jim Dalton, and I went, finally, somebody who's teaching trading, who's actually been a trader. Like this guy wasn't a waiter, now he has a trading room, right? He was director of floor operations on the CME. He's 80 years old. The guy used to eat lunch with Fisher Black from Black Scholes, right? He's, he brought market profile to the world from Peter Stadelmeyer. So I'm like, okay. And he talked like the old floor traders who taught me the business, right? So I was like, I felt comfortable and I started looking at that, but it was kind of hard to learn. And he assumed, and I went, you know what, if I could take this and I could make it a little easier for the regular person to look at and simplify this. And that's what I've been trying to do with Steve and Ray for the last, year and a couple of months now, and try and not, trading is simple. It's not easy.
Right.
But we do have we have the thing to overcomplicate everything, and if you know that if you're looking for supply and there's no supply, well, there's no short, really. And the levels will tell you, right? The way I have my chart set up will tell you exactly where the supply is, where it's coming from, and where it's going, and what their intentions are. And it's just focusing, right? Now, the tough thing I find with retail trading equities is you're trading something different every day. And I must say, I tip my hat to those guys, because that's why I like trading the ES. It's like being married, or, you have your girlfriend, when it's upset, when it's like, the market, right? You guys who trade a different stock every day, I especially like I trade something different every day if I controlled it. But on the retail side,
but you might be surprised. I mean, a lot of this stuff, I mean, we're talking, we have this, this low price penny stock, we call them the former runners and stuff. A lot of the times it's only a few hundred stocks. I mean, which I know is a lot more than one instrument like you're doing, but it's a lot. I mean, I've been doing this for 15 years, and it's the same. A lot of times it's the same. They just come back around. Yeah.
What's funny about though is what I've been doing for a couple of years of trading is every time I trade a chart, I'll just save the chart. So then the next time I see a stock pop up or it gaps up on a scan,
different ticker, same chart.
But I'll type that ticker into my computer to be like, oh, have I traded this before? Because I would trade hundreds of stocks whenever I know. And 9 times out of 10, I'll say, they ran it up last time and then they dumped it.
Yeah.
So I'll probably just let them run it up again, and I'll wait, and then I'll short that dump, because you guys do the same thing with the same stocks, the same times, right? Again and again.
Right. Especially if it's the same deal crew, right?
Yeah,
because a lot of stocks will trade the personality of the person who owns all the stock. That's what a lot of people don't know, right? See, I used to build charts, right? I never traded them, but I'd build them to make you guys come. Right. So for me, a chart is like a party invitation, right?
I like that.
It's like, come, I give you a good price. Don't worry. Don't worry. You know what? It pains me to do it, and I'm going to get in trouble, but I'll sell it to you at 50. Yeah. Right. And then 2 days later, oh no, my friend, it's 35. Wish I could take it from you.
It's like the umbrella salesman in New York City, $3. If it's not raining, as soon as it's raining, $5.
Exactly.
Right. But it's like, it reminds us of EARS yesterday. It went from 1 to 6, and I'm like, how did that go from 1 to 6 on a study with no announced numbers? Like there was no, it was 98% effective, but there was no numbers, and I was like, that's not true.
Here's what you guys also need to find, and this is another reason why I don't show my face. Okay, do you guys know that fund managers buy large positions in illiquid stocks so they can mark up their portfolios at the end of the month, right?
I do know that exists. I don't know how to find it, I have to admit.
Okay, well, a lot of this illiquid stuff that you see that runs from 1 to 6, it's because, well, the thing is, we see, my guys, we would, like, we sell it to them, right? Here's our deal, right? It's sub penny crap, but you can run it up to a nickel and it looks good percentage wise. Why don't you buy the float, right? So we have a guy, like one of our guys is an ex Morgan Stanley fund manager, and we sold him 5 deals. Well, I don't anymore because I'm retired, but my ex-partner, Big Paulie, did. Sold him 5 deals that he could use to mark up his portfolio. Had a little trouble getting it past the trustee, but of the fund. But a little massage and that kind of thing. You kind of work the angles and maybe get the guy a new Mercedes,
Sure.
but whatever has to be done, and so you get the funds, and now what they'll do is, because you know that everything is performance related, right? So all your compensation on Wall Street is performance related. This month is not a month to be shorting stocks because these guys are going to be marking stuff up so they get their performance bonus.
They want their bonus.
Right?
Bonus time.
That, guess what? I bet you every screensaver on every desk is that new Ferrari Roma. Right? Right? Those don't come cheap. Girlfriends don't come cheap. Timeshares in the Hamptons don't come cheap. Private jets. I have friends of mine whose children have never flown commercial.
Yep.
It's a weird, whacked out world. These guys, they need $100,000 a month just to make their nut.
Well, exactly. Yeah. That's their base expenses.
Because they're living like, they're just living like
that's just groceries.
Yeah. So that's why they've got to mark up these markets. That's why a lot of stock will run at the end of a quarter, definitely at year end, right? Mm-hmm. And that's when not to be short. And if you read the buy side with Turney, he would say that he would come in on a Thanksgiving because he knew nobody was around, and he could rip the stuff.
Well, we've always thought of that in the day trade community. We always look for those crazy Thanksgiving week runners. Yeah.
Yeah.
And it happens every year. Yeah.
Yeah, so. Because it's the business.
JJ, yeah. Let's a couple more questions. We do. I'm tight on schedule. We got to record another podcast. I'll let Kim and Steven finish because I'm the king of interrupting. But I got like a million things to digest. So would love to have you back because
I'd love to be back.
And this is
I think you should be a co-host.
Yeah, exactly. and this is the compliment, and then I'll shut up. I got more fucking questions now than before the podcast.
That's good.
That's a good thing.
That's good. Well, it's good. You know what? I see the thing with me is I thought everybody knew this stuff, and for decades I thought I had a head full of useless information. Right? And like nobody wants to know this. Everybody knows we're doing this, right? I didn't know. Right?
So yeah, I'll let Kim and I just want to thank you. And again,
thank you so much.
Would love to have you back when I have some time to. Yeah. So go ahead, Kim, Steven, and thank you, JJ. So
go ahead, Steven.
My pleasure.
Yeah, like I just my question is, and this is because my biggest losses in trading have been in sub pennies. I don't say you guys, but they are famous for letting a stock kind of pop 30, 40, 50% sub penny, history of failing, dwindles. Then out of nowhere, first minute of the open, you get 10 million on the opening candle and it goes 100%. So like my question is, I know that you're doing that and it's obvious, but when do you stop and why do you stop? Because I see you guys pulling the plug at 10, 30, 11 and then riding it back down 100%. So like, is there a deal with the time or something? Or why?
It's just usually at that time the buying runs out, right? We'll hold it up as long as we can to sell it. Right. And it's like they say, when the ducks are quacking, feed them. But sometimes we tend to overfeed the ducks. Right. And they start gorging on the paper. So you got to pull the bids. Right. And then they need a good bowel movement. And then we get back in there. But here's the thing with sub pennies. Right. You got to understand that when you're buying that sub penny paper, there's someone like me who has 1 billion shares of it.
1 billion. A billion.
1 billion, and it's in the Cayman Islands. Okay, or it's in Nevis, or it's in,
I'll just ask one more question. How much can we trust float? If you guys are buying up the supply all the time, how much can we trust float?
Good question.
On real stocks, you can trust it. Yep. On that OTC market stuff, man, just be careful. The thing is, here's the thing about penny stocks. Now you can actually run scans to find lower price companies that have institutional ownership. Here's a trick. When you trade the stuff where you see that there are good criminals that own chunks of the float.
Good criminals.
Right? Right? Don't, and look, and, start looking at, okay, this group, this fund and this fund and this fund, they run together because these guys hunt in packs, right? And they'll take down 6 or 7 deals. And what you want to do is have those deals on your radar. So when they start clicking, the paper route's starting, right? And And that way you kind of get to know who the players are. Like those guys, H.C. Wainwright, right? Those guys
all the time. Underwriters of dilution.
Oh my God, those guys are like McDonald's, billions and billions served, right? I mean, it's like Roth Capital back in the day, right?
I remember Roth.
Roth Capital. Oh my God, those guys with their offices in Newport Beach at Fashion Island. What a time we had there, just because it was across from PIMCO, right? I'm telling you, these guys, they live large. Those guys who underwrite deals. I used to have a client called the Antichrist, and he was ex Drexel Burnham, and he was at the X desk with Milken. This guy was sharp, man. What he would do is he'd do convertible floorless debentures on these companies, and we'd start out at $20, right? And you guys know this, right? So if, say, Steven owns a company, he's the CEO, he needs to raise 10 million. He lets it be known. Tim is the financier. He calls me up. He goes, JJ, A, B, C, D, start leaning on it. So I short the thing down to 10, right? Then Tim goes to Steve and he goes, oh yeah, I can give you, $5 million, no problem. But your stock's looking pretty crappy. How about I give you $5 million? It's 10 right now. I'll give you $5 million at $6, right? So he gets $6 paper. We cover our short. Then I rip it the other way, and he sells that stock into it, right? And that's how I learned how to hide a short position in Switzerland for a year.
JJ, go ahead. Did you want to follow up, Stephen?
No, I'm just saying, I wonder how good a short I would be following your methods of trading. If I managed to be a short, not knowing your methods of trading and fighting against you guys and winning, I wonder how good I'd be on your side.
Hey, listen.
Maybe there's a job offer there somewhere.
Anytime. You're you know what? You look like you're young and you got a healthy heart. I'll train you.
JJ, thank you so much. I'm so glad Tim wants to have you back on. I had a feeling that would be the case. Even though some of this is going over my head, I am definitely, been hearing.
Well, even as a layman, Kim, you just got to appreciate the nicknames.
Absolutely, just the nicknames alone. Fat Polly, was that his name? I don't know.
No, it's Big Polly. We had Big Polly, bloated. We had bloated Gary.
Bloated
we had
Gary.
Bubblehead. There was a guy called the Foot.
I mean, the stories are amazing. Ray's told me that your stories have been amazing. I learned a couple of them recently, but today you've just blown all our minds. I could see everybody's processing. I'm processing. So we definitely have to have you back on. But thank you so much for being so honest and straight from the hip, and from being willing to change your life. I'm glad that you decided to be a contribution to retail traders now, because I think we need you over here.
I'm just grateful. I'm grateful to be alive. I've had a lot of people who helped me when I was down. I have if not for the kindness of strangers, I wouldn't be alive today. So trying to give something back, trying to help. And I'm having a great time doing this. This is, what I do every day, I don't consider work. It's fun.
Yeah.
I'm not yelling at people and screaming at people and, talking to lawyers all the time.
So probably a lot more calm. So
that's stressful.
This has been amazing. We'll have you back again. Everybody, thank you for listening to this. I can only imagine the comments we're going to have on YouTube after this, Tim. But please let us know what you think of these podcasts. Please ask your questions there, and then we can have JJ back on to answer them. So thank you for watching the Steady Trade podcast. Thank you, JJ, for coming on as our guest. Tim Bowen, Stephen Johnson, and me, Kim Van Curtin, are saying a hui ho for now. Aloha.